Hi, in this one we are going to discuss about the dual exchange rate on the POs. That means dual exchange rate on the purchase orders, which means uh, if organizations wants to maintain a fixed exchange rate for all the POs, but based on, for suppose if any currency fluctuations will be there for those countries, they will have a fixed exchange rate between the currencies. So just to avoid the unnecessary fluctuations for the exchange rates. So during that time, they will have an agreement with the suppliers and they will maintain a fixed exchange rates. So that exchange rate we will be kept it in the exchange rate master, which will be booked for all the purchases transactions will be booked for that fixed exchange rate. But if you are booking the fixed exchange rates like that, when it comes to the VAT filing, VAT will be booked at the fixed exchange rate. Because of that, we need to claim the more VAT from the authorities. So, but because of that, we may face a statutory obligation. So, to avoid these purposes, to avoid these things, so what we have done was like we have introduced this dual exchange rate in the purchase order level, where purchase process was going to be the same. We will create the order and we will book an invoice at the predefined fixed rate of the exchange rate. But there we are giving them an option to enter the exchange rate during the invoice, where supplier will give like, okay, what is the actual exchange rate as of that day on that invoice. So once that rate has been entered and PO invoice has been processed, then we are automatically calculating how much is the VAT has been booked on the purchase invoice and what is the and that too at the fixed rate, and the difference between this fixed rate and the exchange rate which has been inputted during the invoice, the difference will be automatically posting as a VAT adjustment entry in the journal ledger area. For that purpose, we have defined we have a certain prerequisites. I mean, like there in the parameters, we have designed what is the where it should be, which journal it should go, and what is the accounting entries and all. In the currency exchange rate master, first it was going to be the fixed exchange rate between the two currencies. This is the, as of now, in this example, I'm just going to show the Pula to ZAR currency. Pula is our local accounting currency and ZAR is the foreign currency. There we have a fixed exchange rate of the one. Okay. And when it comes to the predefined parameters, it's there in our accounts payable parameters, where we have designed what is the exchange rate journal. I mean, like once the PO is posted, it should go to which journal and what is the main account. And in the journal name itself, we have designed added the fixed offset account, so that whenever journal is posting, it should go to the debit that account which is mapped in the parameters, and offset account was going to be this ledger. This is what, these are the prerequisites which we have done for the dual exchange rate on the PO. Now we will go for the process. As of now, I have created a one purchase order and kept it open. This is the purchase order. This purchase process is the normal process, where we can see this particular supplier currency is the rand. Currency is the rand, and we just created an order, confirmed and received. Now I'm going for an invoice base, where we have kept the supplier exchange rate field in customization, so that postings will not be disturbed for the original PO. Adjustment entry only will be posted, that too for the VAT value. Okay. I'm just entering the invoice number. Invoice supplier exchange rate, and here is the one where we are defining the conversion, whether it's a pula to zar. Invoice amount was going to be in a zar, so we need to just mention how much is the zar value to the pula. So once we enter this exchange rate, then system will calculate on this invoice how much is the tax has been posted for the pula and what is the difference between the both. It will be pass an adjustment entry. Now I am posting an invoice. Once the invoice is posted, once the voucher is posted, then here in the invoice screen we can able to see what is this exchange rate is the fixed exchange rate, and this supplier exchange rate is the exchange rate which has been entered during the invoice, so that for the identification purpose we can able to identify this one. This journal will be posted immediately once the voucher has been updated in the system. Okay, and this is the journal which has been posted automatically, and from the PO itself we can able to just see what is the entry which has been posted, and automatic posting. And if we go to this lines, we can see the calculation for the what is the difference between the fixed exchange rate and this one. It has been posted for the 17.30. I will just show the calculation. For this particular one, and if I go to the voucher, how much is the tax has been for this PO was like ZAR value 103.81, and as well as the pula value is also 103.81. That means which has been as we are having a 1 is the conversion rate. Okay, now how much is the rate we have been mentioned was like 1.2. Okay, so 1.3 minus 81 ZAR value divided by 1.2, 86.508 should be the actual input VAT. But we have already taken the, because of the fixed exchange rate, we have already taken an exchange of 103.81. So this for the 17.30 we need to pass an adjustment, so that there will not be any regulation change, any irregularities for the VAT filing. So this 17.30 is the calculation which has been posted for the VAT adjustment account, and as well as that difference will go to their forex account. It's based upon us what ledger accounts it should go, but this is how we can maintain the dual exchange rate for the tax filings on the purchase order. Yeah. So we can see that the 17.3 has been adjusted for the VAT control account, or the VAT forex adjustment account, and that will be debited for the realized forex gain or loss. So this is how we can maintain the dual exchange rate on the purchase orders for the VAT control purpose.